Hi, good afternoon. Welcome to the marketplace. Coming up, the Bank of Ghana faces mounting pressure to implement a significant cut to its key lending rate as the Monetary Policy Committee begins its meetings today. Also coming up, Treasury bill demand dips as market eyes Bank of Ghana policy rate announcement. My name is Darryl Kwao. Thanks for being with us. Details coming up. And thanks for hanging around, everyone. First up, the Bank of Ghana may face mounting pressure to implement a significant cut to its key lending rate as the Monetary Policy Committee begins its meeting today. There's more in this report.
This has been influenced by further decline in inflation rate from 12.1% in July to 11.5% in August this year. The economy has also expanded by 6.3% for the second quarter of this year. These developments are critical in shaping the policy rate going forward. Governor of the Bank of Ghana, Dr. Johnson Isiama, at the last Monetary Policy Committee meeting, promised that they will move quickly to cut the policy rate if fresh data comes across as favorable. But for many, will the current pressure on the cedi be the party spoiler? As some have argued that the central bank should look at how it can use the policy rate to check the recent pressure on the cedi. Or maybe even if the policy rate will be reduced at the end of the Monetary Policy Committee meeting, which starts this morning and end on Wednesday, it could just go down marginally from the current 25%.
Well, as we look ahead, we are joined on Zoom by Dennis Brown, who is Associate Director at Deloitte Ghana. Good afternoon to you. So, do you believe the central bank has enough room to significantly cut the policy rate at this meeting?
Hi, Daryl. Thank you to your viewers and your listeners, and thank you to your observers. So, I mean, I've listened to the argument for pressing on the Bank of Ghana to cut the rate further, and I think they are sound because in between time we've seen significant improvement in the macro economy. We've seen growth in the macro economy. We've also seen inflation drop down to about 11.5%. I think the lowest since 2021, December or so, all of which points to the fact that the major cuts that was, done in July by the MPC, I think about 300 basis points, seem to have also contributed significantly to reducing the inflationary pressure. As you know, the MPC has main, approach is inflation targeting. So the key parameter they look at will be inflation. They look at other things and how that will impact inflation as well, but they look at the headline inflation and how the monetary policy rate would impact the inflation. And we've seen that 300 basis cut has, partly contributed to a decline and a significant decline in inflation, which stood at 11.5% in August. Hence, people are calling for Bank of Ghana to reduce the rate further if it's going to reduce inflation further. But all of this is about a balancing act. So when you ask whether there's room for further cuts, I think they would have to look at it critically. Particularly, we are seeing over the last month or so, the cedi depreciates by between 13 to 15% or so rapidly within just 1 month. It's moved from 10 to 12. I think in some places it's moving around 12.5. And as we know, whenever the cedi depreciates, it has a direct impact on our inflation, right? That together with food inflation. I don't know what's happening with food inflation. There was significant improvement a few months ago because of improvements in the food supply chain, which they cited in the MPC report. Well, if that continues, then that could also if you like, it will be a positive impact that can cancel out the negative impact of the FX as we see it, and maybe leave the monetary policy rate where it is. But I honestly am thinking when the Bank of Ghana should take into account the recent depreciation of the local currency, they are probably or most likely to inch up the monetary policy rate a bit in a bid to stay ahead of the curve, right? To be more proactive, not waiting for that lagging impact to play out through the inflation. They might go ahead of the curve by rather inching up the monetary policy rate, maybe by 50 or 100 basis points, just to arrest the impact of the CD depreciation as we are seeing, which we know is just a matter of time will begin to tell in the headline inflation. So yes, they may have some room for further cuts, but I think they'll stick to a more prudent balancing act, seeing that we are beginning to experience some inflationary pressures through the depreciation of the local currency. That's
Yeah,
what
go
I
ahead.
think.
Right. First of all, I wanted to talk about a little bit more about what the considerations would be and how they can find or strike the right balance between supporting growth and maintaining price stability. There are some institutions that have suggested a cut of 300 basis points. Do you think that is feasible at this time?
I think that is really, really ambitious. And for me, it's not a very prudent thing when you think about the balancing, the very delicate balance that needs to be struck. Like I said, we are beginning to see inflationary pressures, even if it's not telling currently because we don't have the September numbers, which will come later. We know for a fact that whenever the CD depreciates, and as rapidly as it has over the last 1 month, it's just a matter of time before it tells in the headline inflation. So Bank of Ghana would be aware of that. And if you reduce further the monetary policy rate, what you are doing is rather making spending attractive and creating disinvestment, from those that have excess liquidity. If that is not strongly backed by supply of goods and services, then you have a situation where you have more money chasing fewer goods, and then kitchens demand pull inflation, which is really what the monetary policy rate fights. So when you see Bank of Ghana increasing the monetary policy rate, what they are doing is trying to make spending, unattractive, cause people to, invest more, thereby, reducing liquidity in the system and reducing the demand pull inflation. But if you are not careful, if they keep increasing or anchoring it as high as we've seen in time past, then there's also a negative impact that comes through in the form of cost push inflation, because then businesses that need to fund growth may either scale back or will fund that growth at a higher cost, which will come back through cost push inflation, which is the goods and services that will be supplied anyway, but will be supplied at a higher price, which comes back in another form of inflation. So that is why Bank of Ghana would always look at that delicate balance. Where do we place it such that the cost of capital is not too high, and yet we are able to suck liquidity out of the system to avoid demand pull inflation? When the cost of capital is not too high, what you are then doing is supporting growth in the real sector, because then people can have access to funds at a cheaper cost to pursue growth, etc. So that balancing act is always important. These are the some of the considerations they will look at in striking that.
I'm going to ask you to look into the crystal ball and try and predict what you foresee the central bank do. What would you advise?
Yeah, I think it has probably already come out in my earlier submission that when I look at the FX, which has an immediate impact in inflation, it's just a matter of time before we see inflation move from maybe 11.5% to 12.5%. They will begin to tell, immediately. When I look at that, I mean, unless there are other improvements in the other macros, which is expected to cancel out the negative, impact, I would expect the Bank of Ghana to rather inch up the monetary policy rate. And this will be, an attempt to stay ahead of the curve. They see the FX rate, what's happening. They expect for it to translate into increased prices. So they would like to stay ahead of that curve by inching it up to, absorb the impact, that we expect on inflation from the depreciation of the local currency.
All
Yeah,
right.
so I expect for them to inch it up marginally, maybe between 50 to 100 basis points.
All right, thank you so much. We'll be watching Associate Director at Deloitte Ghana, Dennis Brown there. Thank you so much for your time. We're expecting the central bank to address the press ahead of that meeting. We'll bring that to you when we have word. Now, turning to the financial markets now. And government failed to meet its Treasury bills target only a week after a return to oversubscription of the short-term instruments. Bank of Ghana's auction results show that interest rates on the shorter end of the market also increased, reflecting the low demand by investors. Mark Jordan Sikanate, a senior research analyst at Loris Africa Securities, joins me on Zoom. Good afternoon to you. What do last week's underperformance in the T-bill auction and the rise in short-term yield signal about investor confidence and liquidity in the market?
Good afternoon, Darryl, and thanks for having me. So like you mentioned, after overperforming last week's auction, the government couldn't meet its target in just the auction that ended last week. In terms of liquidity, I wouldn't say we have dried up on the market. I believe the undersubscription is largely due to the fact that government's target for the auction was really high. If you look at the government target of about 8.29 billion, that was significantly high above that of the preceding week. And as such, I had anticipated that given yield level at the moment, it would be difficult for the government to meet such target. Now, in terms of yield, we saw an increase in the 91-day and then the 182-day bills, slightly also indicating how the play of returns and how investors are moving funds in the market. It was also anticipated because given the high target, I believe the government had no choice than to loosen its grip in terms of yield compression in order to, attract more bids in the auction. So really, and that's it on the market. We also saw an improvement in demand because when you check the bids that came through, that's like 6.5 billion, and that's considerably high above what we saw in the previous week, around 4 billion, and that's about like 48% in terms of a week-on-week increase in investor demand.
Yeah, and we've been talking about the upcoming policy rate announcement as the MPC begins this meeting today. How will a decision whether to cut or decrease the policy rate have on demand for Treasury bills and the direction of yields in the near term?
Okay, I think I'll take it as simple. So when you take Treasury bills, close competitive to Treasury bills are largely the BOG's OMO rates, which OMO bills, which have their yields actually pegged around the monetary policy rate. So really, if we see a cut, that means yields on that end are going to go down, and that could also help the government raking funds at lower yields on the Treasury bill side. If it goes up, we'll see the vice versa. Our expectation, however, in the upcoming MPC is largely points to a hold. I mean, prior data had shown that we could see, and market consensus was also around some 300 bips cuts in the MPR. But given our FX dynamics at the moment, we've seen I think so far in the month, we've seen over 7% depreciation. We've also seen a looming tariff increase, which could also change the favorable outlook we have for inflation. And really, with this in play, we believe the a hike could have helped, but at the moment we are still high above inflation. And so I think what the MP and PR will move on to do is probably hold the rate and to assess a near-term dynamics. So really with that in place, you could see a neutral play on Treasury yields. So what we expect in coming auctions will largely be the liquidity and return dynamics and how investors move around these funds in the market.
Okay, quick stock market update. We are expecting the share prices of GCB Enterprise Ghana and MTN Ghana to rise further this week. This is due to outstanding bids above the market prices. What else should we expect?
Okay, so thanks for the stock market. So we've seen GCB maintain an upward momentum, and that's largely influenced by an anticipated upcoming payment in dividend. And on the stock last week, we went up to an all-time high of 12 pesos. And we expect further gains this week. However, away from these counters that you mentioned, we are also expecting gains from counters like FML and Camelot, which has also seen considerable bids above market price.
All right. Thank you so much, Mark Jordan Sikanate, Senior Research Analyst at Loris Africa Securities. Appreciate your time with us on the marketplace. We are taking a short break. When we come back, we have an update on the weekend's EcoBank Journeys Habitat Fair and what exhibitors as well as patrons have been saying. Don't go anywhere. Welcome back to the marketplace. We have quick updates on the central bank's presser ahead of the MPC meeting today. A few talking points we're receiving from our reporter there. The central bank governor saying the cedi remains among the strongest currencies globally year to date, appreciating by about 21% as of September 12. The governor also mentioned that Ghana's trade surplus hit $6.2 billion in the first 8 months of 2025. Underpinned by strong gold exports and higher cocoa receipts. And one more, Ghana's gross international reserves reached $10.7 billion in August 2025, covering about 4.5 months of imports. The central bank governor there speaking. We continue to follow that for you with subsequent updates. Now, the EcoBank Journeys Habitat Fair's third clinic ended with waves of excitement for homeowners and property seekers. Exhibitors took center stage to showcase their products and services, sharing not only what they deal in, but also their experiences and satisfaction with the fair so far.
Bank Journeys Habitat Fair Third Clinic saw exhibitors highlight their wide range of products and services. They range from building materials, security, interior decor and finishing options. Many of them expressed satisfaction with the platform, describing it as an opportunity not only to make sales, but also to connect with potential clients.
We are Automation Ghana Group. We are an electrical engineering company. We do everything electrical, so from renewable energy to providing smart solutions to the sale of electrical components. Our experience so far has been good. We've had a few people come to us, and we are still hopeful that before it ends today, a lot more people will come. And if you come to us, we are currently running a 10% discount, so you are getting massive value for your money.
So Virtual Security Africa, we are into sales and installation of electronic security solutions. With that, I'm talking about security surveillance systems, we're talking about perimeter detection, we are talking about intrusion detection. So basically CCTVs, fire alarm, intruder alarm, access control, time and attendance, electric fencing. We have body-worn cameras. Beyond that, we have vehicle boom barriers, road blockers. We do asset tracking, anything security that you think of. We are giving great discounts on our CCTV camera packages, up to 30%.
If you want the best security door in Ghana right now, you are the right place at Superlock. So at the fair, we've been with them for several years, ever since they started. And after that, we get a lot of people coming into our showroom. It gives us a whole lot of leads. Many people get more ideas about what we do.
All right, that's the marketplace. More news on our website, myjoyonline.com/business. More on what the central bank governor has been saying. Remittance inflow slowdown not affecting city performance. According to him, read more, myjoyonline.com/business. Don't go anywhere. Money Lab closes this bulletin.
Hello, welcome to Money Lab. My name is Paul Kofi Manti, the Managing Director of EDC Investment Limited, a member of the EcoBank Group, and an author of 9 books on personal finance. In the next few days, I'll be taking you through some tips to financial freedom or financial independence. Today, I want to start with 2 important quotations. One by Jim Rohn. And he says, a rich man once said, if you took all the money in the world and divided it equally among everybody, it will soon be back in the same pocket it was before. You should be asking yourself, will you belong to those who will have again or those who will not have? And Robert Kiyosaki says, money is one form of power, but what is even more powerful is financial education. Money comes and money goes, but if you have the education about how money works, you gain power over it, and you can begin building wealth. Many thanks for making time for Money Lab. Remember, financial independence is possible.